Ladies and gentlemen, and welcome to today's session. I see there are a few people that are still joining us, but I thought I'd at least get started, and then as everybody joins, they can settle in as well. Right, so welcome. I see that some people have their hands raised. If you want to, I'm going to show you just now as well, but if you want to submit a question or comment, you're welcome to submit those through the question blog. Yeah, so that's the first thing then. Right, so let's get started. Welcome. It is fantastic to welcome each and every one of you. I see we've got 110 people that are already logged in and that have joined us this morning. Some of you were already logged in at 8:20, so that was fantastic to have each and every one of you joining. I am very excited to share the what's new information with you today on behalf of Caseware Africa, and we're going to spend quite a bit of time looking at some of the changes. Right, I know a lot of the faces on today's webinar, but there are also a few new ones. And so I want to welcome all of you also from myself. My name is Johanna Skreder. Many of you will know me. If you don't, I'm an independent consultant to Caseware Africa, and I fulfill a role of content owner, and I also do quite a bit of the training for Caseware Africa on Probe and also SQM. All right, so welcome to all of you. If you are wondering, where is Christian? Well, he is on another call where he is presenting the Probe, sorry, not the Probe, the Caseware Audit International What's New webinar. So we did it a little bit different this year, where we are going to run the Probe and the Audit International ones concurrently. And then right after that, at 11 o'clock, we will have another session with financials and all of that. So maybe this is then a good time to firstly say Christian is looking forward to seeing you in the second session, where he will be discussing a few more changes, a few extra new things. But for this time then, I will be running today's session. Then also just in terms of the session administration, all attendees are on mute and your cameras are turned off. You can use the chat function, and you might have noticed I put a good morning earlier on. Ninka's also just done a good morning there to respond to someone, so that's all fantastic. We are responding. I've got Ninka on standby for all your questions, and she will also flag anything that I can do online or where we need some more input or information. All right, if you lose your signal or if you are struggling with sound, maybe exit the webinar and just enter again. And then always best is to rather use the app and not your browser. The browser tends to give a little bit more complications, but it does also work. So if you are on the browser, but if you are experiencing some trouble, consider using the app rather. And then of course the session is being recorded and it will be made available after today. Well, not maybe after today, maybe next week, but the recording will be made available. Right, the agenda for today, as you can see, we are currently in the Probe session, and then concurrently the Audit International session is being run. So maybe at this point in time then, if you are a Probe user, you are at the right place. However, if you are an Audit International user and you want to see what's changed in Audit International, please go back to the email where we were advertising or reminding you of today's sessions, and just go make sure that you rather than actually join the Audit International session. As I said, Christian is running that one concurrently, so you don't want to miss out on that information. At the same time, if there are Probe ones on that side, they might join us a little bit in a few minutes' time, just to make sure that everybody is on. Good. Right, and then from 11 o'clock onwards, we will be running a second session. So you'll see there's a little bit of a tea break, comfort break area, break in between, where you can then join a third webinar where we will be discussing financial statement changes, Caseware Working Paper changes, IDEA, and a new app client inquiries. So please do join us for that session as well. That's where Christian will talk to you about a lot of changes. Ninka will introduce the changes in the financial statements, etc. So also a super valuable session. So that's why today's one is just going to go until 10:30, or this morning's one and then I'll hand over to the next guy. That is a separate webinar link, so you'll log off and log on again. All right. Next up then are the topics that we're going to discuss today. We've got a full agenda for the session. Assurance reports, we'll just quickly have a look at the assurance reports. The document manager had a few small changes. We're going to discuss speed improvements, and then we'll jump straight into the biggest reason for this release, being ISA 600 revised. We'll look at what's new, and then also just quickly end off looking at a few fixes and known matters. At this point in time already, I want to say, and then I'm going to try not say it too many times after that, the majority of the, well, all the changes actually are included in the handout, the What's New in Probe document. It is a fantastic resource. There's about 50 pages in there really explaining in two different ways. The one lot explains to you per document what has changed in that document. And then after having gone through all of that detail, there's more detail to actually explain the methodology a bit more, how to record an entity, things like that. So it is a fantastic resource. So please, please, please make sure that you actually read that document. And then even if you are maybe doing training for your staff, anything like that, also share that with your teams so that they can also refer back to those notes as often as may be needed. All right, so let's get started then with some of the topics. And while we then look at the detail, I'm going to actually just hide or switch off my camera. It's really just to make sure that you are getting the visual and the sound properly, of good quality. I don't necessarily think you need to see me in order to be able to hear me. And I found often that the bandwidth just handles it better if we only show the slides or the screen and the sound then. But in the meantime, please feel free to add any questions as they are coming up. I've got them on the second screen while I'm monitoring them and seeing as and when they come in. All right, so let's get started there. Assurance reports. So the assurance reports in the financial statements have been updated then also for group ISA 600 changes. There are a few other changes that we'll also talk about, but the assurance reports have been updated in accordance with the ISA 600 changes. All right. Then also what you will see is that, and we'll talk a little bit more about public interest entity and enhanced auditor reporting matters, but in accordance with the enhanced auditor reporting rules, there are also additional paragraphs for when you are auditing a public interest entity, and you have to include the additional disclosure in terms of the public, in terms of the enhanced auditor role. Rule, I keep saying rule, enhanced auditor reporting rule from the IRBA, and so that will be also be made available in this template. Christian will also discuss it in a little bit more detail in the second session, so if you are interested or curious how that works, you can also have a look at that in the second session. Right, then the document manager, the tools or the additional tools that were made available. So I've mentioned already the client inquiries app, as well as some changes on IDEA. That has more integration now with the Caseware Working Papers and with your audit file. So there's already new folders. You can see right under the financial statements folder, there are two new folders there. First one being IDEA integration, second one client inquiries app. Christian will give you some more information as to how those are used, again, in the second session. Right, then speed improvements. So the team is continuously striving to make the product faster, and every release they work on some things where they are actually making it faster. So in this year, they have taken the databases in the template and cleaned them up. And the result of that should be that your recording, your process of recording risks as well as controls should be improved, and you should also see that you are opening documents faster than you may have in the past. This is currently only applicable to new documents. So in a future release, the team will then actually work on older files that can also be improved. I see the email, I see more than one question asking us about where can we download the What's New document. where can we get this handout? I don't know, Linka, maybe you can also just have a look at the link, but there was an email sent yesterday from Linka's email address that said the releases are available, here they are, and in there are links to the Success Community, to the website, and to where you can download those. So they are on the website, and also if you look at your email that you received yesterday, it will also be in there. All right, so it has already been communicated to you. All right, so those are the speed improvements, just in terms of probe. Later on in the Caseware Working Papers session, you will also hear about some other speed improvements that were made, but specifically then in the probe documents, recording of risks and controls should definitely be faster. Then ISO 600 revised. This is the standard that deals specifically with the audits of group financial statements, and this standard was revised. And if you see the bottom of the slide, it states there that it is effective for audits of group financial statements for periods beginning on or after 15 December 2023. Practically, what does that mean? It means that for any financial period that started after 1 January 2024, this audit standard is then applicable. So likely, you're probably not looking at a June year end necessarily, or June period end, probably more maybe a September year end, definitely your December 2024 year ends. And so if we then think about December 2024 year ends, we think maybe interims. And so your upcoming interim audits will already have to comply with ISO 600. Then also maybe a question that we get from some clients is whether I can choose to rather use the old method of ISO 600. Now, what's important here is that ISO 600 has never been in Pro before. So those of you that are used to auditing groups, up until now, if you had audit groups to comply with ISO 600, you would have had to supplement the probe template with additional working papers, additional documentation to see how you are complying, or to show how you are complying with ISO 600. So for the first time now, you will be able to actually perform your group audit engagement within Probe without any additional documents. I know some firms have developed some Excel sheets and things. So those things would, in theory, all be replaced now by the template changes. All right, so what is ISO 600 revised specifically about? So this revised standard has included then new and revised requirements as well as application material for how to actually audit a group set of financials. And then in line with that, they've also aligned the standard with ISO 220 revised. That was quality management at engagement level. So that, you may remember, was one of the big changes from last year's probe template, where we changed a lot of the documentation to give the engagement partner more accountability. A lot of the checklists and things were changed. So all the engagement partner sign-off was changed, and quite a lot of those things were changed to comply with ISO 220. So in terms of your group audit, you're now just also complying with ISO 220, but at the group level. And also ISO 315, your risk assessment has also been incorporated into the group audit now. So that's, if you want to, just caught up with that now. All right. In putting together the template, in designing the template, I'd say three big things were taken into account there. The one being the identification, assessment and response to risk of material misstatement in a group audit file, and then the nature, the timing and extent of the direction, supervision and review of the work performed by the component auditor. There's a lot of emphasis on that, in that the group auditor, remember, is taking ultimate responsibility for the audit report or the audit opinion on the group set of financial statements, and therefore has to incorporate the work of the component auditor, communicate, etc. And then linked to that is actually the fact that the component auditor is now part of the engagement team. If you go and look at the definition of engagement team in the code, the component auditor is now part of your engagement team. So in the same way that you would have had regular communication with your audit manager or your trainees, your engagement team within your firm, where you now have component auditors either within your firm, so in other words, maybe another team, or a component auditor outside of your firm, maybe in a network firm, or just completely independent. You now need to have a very similar level of communication, instruction, direction, supervision, and review of that work as you would for your own team. And I want to highlight here actually throughout the audit. Okay, that to me is quite important. So not just at the end of the audit, it's not just sending group instructions and getting it back at the end anymore. There's a lot more interaction required. All right, so that's ISO 600. Now, how does that then play out in probe? So I have said that previously this was scoped out of probe audit. So if you don't want to early adopt, for example, there's no other option, no other old template in probe. So you might remember way back when we had ISO 540, the accounting estimates, we actually had the effective date into the programming. So if you had a financial year in before the effective date, you could use the old standards requirements, and then from the effective date onwards, you were automatically on the new standard. That's not applicable. So if you use the ISO 600 material or the content, you are early adopting ISO 600 within probe. If you're not using the ISO 600 content in probe, then you need to use your old documentation, the way that you've always done on group audits. All right, and then the purpose also for the content, or one of the main points to remember in the probe template, is that we are enabling group auditors to complete a standalone audit file that supports group auditors' evaluation as to whether sufficient appropriate audit evidence has been obtained that they can base their group audit opinion on. So I actually already want to plant the seed now to say one opinion, one audit file. Let's just see as to different types of groups that we can find based on what we find in ISO 600. All right, so the first group is also the one that I'm going to actually show you in the product later today. But for now, scenario one, you've got a client holding company. It is a company, Pty Limited in this case. So it's a separate legal entity, and they have subsidiaries A, B, and C who also are subsidiaries. So you've got, legal entities, companies. So you've got 4 companies in this group, and when they get consolidated, their information then forms the group financial statements. Now, it's possible that sub A, B, and C may or may not be audited. Maybe they are only independently reviewed, or their financial statements are only compiled. I'm guessing it's most likely that your client hold company, Pty Limited, is going to be audited. Now, how many audit files do I have? How many caseware files will I have? One opinion, one audit file. So let's assume then that your client holding company has an audit, as well as your sub A, B, and C. So there's 4 entities, 4 audits, 4 audit files, plus then your group financial statements. So that separate audit opinion on the group financial statements will have a separate audit file. And the reason is really just that it is easier to keep the information separate for each of the audit opinions, to make sure that you've got the necessary documentation there. Otherwise, based on the research, based on the inquiries that we did with the market, it was felt that if I was going to document my group audit working papers and the client holding company working papers in the same engagement file, we were going to actually mix it up and get lost as to whether we've got all the information we need for the group versus the company only. All right, so that's really the main thing there. The second scenario, so this scenario, first scenario is then 4 separate entities. The second scenario that we have is then to say that we have one legal entity, in our case, company ABC, and company ABC operates in separate divisions. Very specifically then, these divisions actually have quite drastically different business activities. So they're not just, it's not just my Joburg branch and my Cape Town branch. They're actually quite different. And or they actually have their accounting records being kept separately to such a degree that when I want to put together the financials for company ABC, there needs to be aggregation or some form of consolidation of the financial information before I can get to the financial information for company ABC. So that is also then a scenario where ISO 600 group financial statement, the group audits rather, will apply. So not just the fact that I've got divisions or branches, but the fact that the financial information is aggregated or consolidated to get to the single entity's financial statements. All right, so then just to make it more visual again, the group financial statements is a standalone audit file. Each audit opinion will have a separate audit file. So scenario 1, as I said before, client holdco, audit of the holding company, one audit file. Group audit financial statements or group opinion, that's a separate file. And then possibly then sub A, B, and C, depending on whether they have any audits or independent reviews. In scenario 2, though, we've got one legal entity, and that being company ABC, one set of financial statements, one audit opinion, and therefore one audit file. All right, so that just to make it very clear there, because there's no group audit opinion and the legal entity audit opinion in scenario 2, you can then just have one audit file. All right. So that's just a bit of introduction before we get to the actual documentation. Now, what I've done is I put together the workflow. The first one here that we're looking at right now is the workflow for planning and risk assessment. And then later on, when we get to the audit response, we'll have a similar workflow or similar image where we're also going to work from top to bottom. Of course, please, ladies and gentlemen, I'm not addressing every single question, every single document. So yes, these are the ones, but of course, your calculating materiality, your discussions with those charged with governance, all of those items also are still relevant. So the fact that I'm just highlighting a few ones, I'm really just highlighting the ones that are critical, that are new to the group structure, a few things that I want to highlight. But there are quite a number of other changes as well. Again, please refer to the What's New document. And yeah, there's also other changes that I'm not discussing. If I was to discuss every single bit of change, we'd probably sit here for a bit longer. So I've tried to really highlight the most critical changes, the things that you probably need to really get a high level overview of what will be in your new group audit file. Good. So we'll start, as always, with the 1020 engagement evaluation. And the first change that we have is an engagement type, the question around the type of audit and type of engagement that this file will be. So we now have 4 types of engagement. So up until now, in your extant template, you have audit and review, which basically tells the file whether you're going to do an audit or an independent review. So we've now added 2 group types of engagements as well. And so you'll have these 4 options. Audit, which is a single legal entity audit. There's no aggregation of financial information, anything like that. Then you've got group audit, single legal entity, group audit, multiple entities, and then your review. So let's just have a little bit of a breakdown there to see how do I decide on each of these. So you'll see in this table, firstly, the 2 extant types. Audit single legal entity is in your freeze pane at the top, you'll see audit as opposed to review. This will be for a single legal entity, only one business unit, or if there is more than one business unit, they have no separate locations or no separate management or information systems. Right, so again, you can have more than one branch or business unit, but if they are integrated in one accounting package, one set of management, it's not a group. Okay, as opposed to with your group financial statements and your audit of a group. The first one is the group single legal entity with multiple business units. So in your freeze pane, it will say audit group single as opposed to the other option that's audit group multiple. And when we talk about groups going forward, then it will include both of these. Where there is a unique scenario or the way that we treat one differently to the other, I'll highlight them. But audit group single is then basically where businesses do have more than one business unit, and those business units have separate locations, separate management, or separate information system. And then lastly, there's a consolidation process or an aggregation process to prepare a single entity's financial statements. Right. And the last column, audit group multiple. I guess this is, if you want to say, your traditional groups. So a group with more than one entity, legal entity. Financial information is consolidated and that could be in the scenario of a parent with one or more subsidiaries, JVs, investments accounted for by equity method, etc. All right, so the very first thing you'll do is you will tell the probe file what type of engagement it is. And so most likely, in looking at what's happening in today and what's new, you will probably either choose audit group single or audit group multiple, and then your file will change as follows. All right, so let's go and have a look then at 1050 so that I can just show you this document. Oh, sorry, not 1050, 1020, of course, engagement evaluation. So the order of the questions have been moved around a little bit, because you might remember that in the past, you only actually told that it was an audit file a little bit lower down in the document. Whereas now it is your very first question to say, tell me what must I be? Audit, review, audit group, what am I? Okay, so I've selected audit group multiple entities, and you will notice that there's a lot of guidance and instructions, the instructions being the red ones, the guidance being the green ones, to really help you to get to understand this. And the red instruction here tells you that this is a separate file, standalone audit file. So you'll have a separate file for the holding company's entity's own audit work. What you'll also notice, just for today's sake, is that I've selected the extended option. Extended, just to remind you, adds additional guidance from the application material and other resources. So if you were to choose the core version of the product, you would sometimes get less questions, sometimes less columns in some of the tables, because that is what's in the bare minimum required to comply with the requirements. But you will probably also see that the extended version is just, from my perspective, a lot more user-friendly, or helps you to really remember all the requirements or all the application material guidance that you need to remember. All right, so that's your first question. And then in this section, you get asked a few questions so that you can conclude at the end of the day and say, did you select the appropriate engagement type based on your responses to these above questions? So what you'll find is that you really need to understand ISO 600. You cannot actually just do this audit without having had some technical, theoretical training on ISO 600. In order to, for example, understand, do the consolidated financial statement include financial information of more than one legal entity, etc. There's a few questions where, well, lots of questions, where really you need to understand what they mean by those. All right, so those were then the verification questions, and then we actually go back to the what's new, and we say, right, what is next? So still in 1020, your engagement evaluation, as you then answer some of the questions, I'll show you the questions just now, but the next step in the process, or the next important step for us to note then, is that we need to record the entities, if it is multiple entities, or the business units, in the case of business units, so that we can start to obtain an understanding of this group and start seeing what's going to happen, where is it. So the purpose that we are after now is to identify the components, to determine the expected involvement of the component auditors, and also not just in the further audit work, but actually the involvement in whether we need their help in obtaining an understanding or doing the risk assessment procedures, or whether we will do them. And of course, then, as I said, the further audit procedures. We also need to evaluate whether we've got access to component auditors, whether we have the necessary resources. Because if we think, yes, that auditor is going to do it, and actually they come back and they say, we've never audited a mining company. Well, what are we going to do then? How are we going to actually get the necessary, sufficient, appropriate audit evidence? So we need to consider that as well. And then also to determine if we will be sufficiently involved in the work of the component auditor. There's a lot of focus on that. Don't just let them run off on their own, but to really be able to be involved with them. Right, so if we then go and see what are we going to do on 1120, this is where we're going to add the details of all the entities or business units that will be done in 1120. Now, let's just go back to 1020 where we were earlier and see how do we get guided from them. So we've selected the type of engagement, we've started to complete the information, and if I just go on the document map on the left-hand side, after I've done the preconditions, I'll get to a section called components. This here is where I have a lot of guidance. So firstly, the question says, did we obtain an understanding of the group and its environment, including its organizational structure? So you might remember that doing an audit is an iterative process. But maybe practically up until now, you've always gone through the process of let's complete 1020, sign it off. Let's complete 1030, sign it off. Let's complete. But in really getting to all the work that needs to be done in a group, and specifically from the auditing standards, in terms of deciding whether we're going to accept or continue the group audit, we need to understand the group. We need to understand what work is necessary, which component auditors we're going to need, and a whole lot of other stuff. So we actually have to jump ahead to quite a few of the documents to go and document and understand and do what's needed to be able to come back and conclude, are we going to accept the audit or take on the audit or continue the audit? All right, so hopefully in year 2 or 3, it's going to be easier. You're going to have a lot more of an idea in your head. But in your first year, definitely you are going to need all of these steps. And of course, in all years, you need the documentation that these steps have been completed. So the first question then around components is telling us, obtain an understanding of your client. You'll go to 1120, where you are then asked to go and document, well, you know 1120, the organization and its environment. So that's in there. At the same time, though, you can also go and record risks. I'm going to just use the next record button. Record not necessarily a risk at this stage, but we've added a function there for you to add an entity or a component. And when you choose that option, it will take you not to 1120, but to 1120G. So G is indicating each of the, I see that I need to just zoom in a little bit. Is that better? I hope that's better. In 1120G, that G is telling me it is a group document. So group documents are then all have the G after the number. So sometimes they are really just an extension of the first document, and other times they are very unique, very specific documents for the group. So there are about 5 or 6 of those documents. But yeah, just when you see G, that's the group document. Okay, so I'm going to jump to 1120G, which is where we are going to go and record the business units and the entities. Right, so this is then 1120G. Let me just again increase the size a little bit. I know these tables are quite big, quite a lot of stuff to do. Right, so you'll see also in the document map some group information, then entities or business units, and then later on the components. So when we get to this document the first time, we're not going to actually go to components. We don't know components yet. We only just know at this stage what we have. So we've got, well, group information, the year end. And then in terms of the entities or business units, I can go and list or name each of the entities or business units, okay? I will then be able to document the type of relationship, whether they are new or derecognized. Obviously, next year they will be existing. So if I'm documenting a new, I see this one just says new. When I roll forward, next year it's going to say existing, and all my information will also roll forward next year. The country, what type of operations, etc., etc. Basically, all the way up to this first black line. All of that I can already document right now to understand what is the framework that they use, are they being audited or not, etc. I'm trying to keep it simple with everybody being audited, everybody having the same year in, just to keep it simple. All right, so that's what I'm documenting at this stage. What are my business units and entities in this group? Also note that we've got I want to call it a default entity called consolidation. When we get to the component, we're also going to have a default component called consolidation. And that is basically saying that there will always be stuff that's only going to happen at consolidation. For example, your non-controlling interest will always be at consolidation level only. The accounting thereof does not happen in the holding company or subsidiary A or subsidiary B or component, whatever. It happens at consolidation level. So even when we are going to be considering the audit work on that, it will be at consolidation level. So that is why we have a separate line or separate entity, business unit, if you want, for consolidation. And then I've got my other entities all recorded there. Adding an entity, very simple. There's a little button there that I can just click, add the entity. It will literally just add a new line, and I can go and add my information. You'll see just here at the bottom is where my detail of components are already popping up. At this point in time, I'm not recording components yet. All right, I'm literally just recording the entities. Good. So I've recorded the entities, and I'm now going back to 1050. Oh, I keep saying 1050, apologies. Going back to 1020, which is where I was earlier. That said, did you obtain an understanding of the group and its environment? I went to 1120, I didn't show that to you, where we documented some information and we've recorded the entities. Next question then. Oh, and of course, there's the instruction as well that in red that said go and add them. Next, did we determine whether the group have shared service centers, centralized activities, or common controls? Now, these 3 points are very, very important. These are the points where if a client has common controls or centralized activities or shared service centers, those types of, or that type of information around different business activities, around different business units, will be what is going to guide me in identifying or grouping, if you want, the components. So that's why even before we go and we say which are my components, how am I going to group them, we first go and ask ourselves whether the client has any of these shared service centers, centralized activities, or common controls. All right, so that's the next step in 1050. Let's just go and have a look at what I've got on the slides for us there. So that's the next step I went back to. Apologies. I went back to 1020 engagement acceptance, and that then guides me through to go back to 1050, planning the extent of risk assessment procedures at group level. That's obviously a new section. So what am I doing in this new section? I will consider, as I've said already, shared service centers, centralized activities, or common controls to be able to help me to identify components later on. There's also an element there that asks us about whether the classes of transactions, account balances, and disclosures are based on estimates. I'm not going to go into the detail of estimates, but there's a lot of guidance in the what's new of estimates. And the basis is that you need to in 1050 say, yes, there are estimates. And then when we go and identify just now, actually say where are the estimates. And only if I then say there's an estimate in property, plant, and equipment, only then will I be able to actually go and see the information in 1053 for accounting estimates. So in our beta testing, we found there was a little bit of a confusion about how do I treat estimates. Please follow the steps from the what's new and really just follow it through from there. Then what we also consider in gathering information is to see which of these account balances and classes of transactions, account balances, or disclosures are initiated through the consolidation process. That was my non-controlling interest example that I mentioned earlier. We will also then go and say, where do we expect the audit work to be done? Do we expect to be doing it centrally? And by centrally, we mean in the group auditor's file. Centrally also means that we can actually, and again, the what's new puts it so well. We're basically going to test by testing one population. So we aggregate all the information making up that balance into one population, and we select from that population. We test that one population, as opposed to disaggregating, let's say, for example, the property, plant, and equipment. Property, plant, and equipment will maybe spread across all of my business units or entities or components or whatever this may be. And I may want people to go and test the additions or the whatever it is that I want them to test, but I'm not going to necessarily test them at the group auditor level because there's no common controls, no centralized activities. It makes sense for the component auditor to go and test them each in their own individual scenario. All right, so that's what the consideration is with centrally. Centrally, in my mind, I see one population or by the component auditors individually. All right, and then also where I'm going to actually involve the component auditors in performing the risk assessment procedures. And so your normal risk assessment procedures, understanding the account, how it actually came about, in some scenarios, actually recording the system description, and of course, doing your analytical review procedures as well. Okay, so that's 1050. Now let's just quickly have a look at this. First of all, what I want to see, you can see those two little stars there. Only when I say yes, there's a consolidation balance, so the balance comes about as a result of a consolidation process, or if I say that audit work will be done centrally, only in those two scenarios will the rest of 1050 actually get activated. In other words, if I say, yes, there are shared service centers, centralized activities, etc., classes of transactions, account balances, disclosures based on estimates, that's going to take us to 1051, types and volumes of transactions. And I say, well, the component auditors are going to do the majority of the work. So there's no consolidation process balances, probably rather a unique scenario or not to be happening all that time, but there's no consolidation processes and audit work is expected to be done at component auditor only, so no single populations. Then I won't actually have other questions in 1050 gathering information, because a lot of the questions are about accounting, are they registered for VAT, those kind of things, which is not relevant at group level, at the consolidation level. All right, so that's maybe just something also to bear in mind, is the rest of 1050 will only appear if I do actually say yes to the consolidation process, or that audit work is expected to be performed centrally. Right, another point to bear in mind in 1050. You may remember that in the probe template, you have options to sometimes include questions for all your audit files or choose them per audit. So an example from the screen that's currently on your screen, the analytical review procedures, where we gave you an option to say firms can decide whether to develop expectations in 1052 analytical review procedures, or to perform simple comparisons in 1051. So you can choose where you want to do your analytical review, and your options are not in all files, elect per engagement, or in no files. So we've got a similar question to that for group audits multiple. Okay, what does this question relate to? So the questions in 1050 as well as 1051, which is your types and volumes of transaction, where you go and you say the accounting policies for PPE and for each of the other account balances, and you consider whether there's estimates, and you tick all those little boxes. That will then make things appear in the balance sheet, in the work programs, etc. You can either choose to only answer the bare minimum that is applicable to your group, or you can say, well, actually, I want us to rather answer all the questions on 1050 and actually all the transactions and balances whenever there's a class of transaction account balance disclosure in the current or the prior. All right, apologies, that's not where we go and tick the accounting estimates and stuff. It's just that first part I'm going to show you just now. So you can choose how to do that. Now, what does the template ship as? It says not required, because the standard doesn't require it. But we have identified that some firms would like to go and record or go and answer all the group questions in the group file, all the questions in 1050, and the transactions and balances in 1051. So that gets set in your probe firm settings. In the file I'm going to show you now, I have activated it so that we can actually just see what it looks like. So let me take you to 1050. Right. Some of these questions, let me just quickly go and look for them. I want to actually just show you before we come back to this one. Oh, we are in 1020 now. Sorry, that's why I can't see them. So we spoke about, we're going to go to 1050 to document whether we have common shared services, common controls, etc. That question 26, we go to 1050 then. Again, I'm just going to increase the size of my screen. And what do we have? We've got quite a few things here. So first of all, again, we're going to document the type of risk assessment procedures. Then this section that's now called plan extent of risk assessment procedures. Important here, only if I say yes to one of these questions, like let's say, for example, shared services or similar activities, or then the one about common controls. Only if I say yes here will I see the column in 1050G. I'll show you those columns just now, but note these 4 questions. If I say no to them, the column will not appear in 1050G. Okay, so that's the first part. Then we get the questions about relevant balances and classes of transactions. There's a question about accounting estimates that I said to you about the estimates, and that there's a special thing there, so just note that. And then again, guidance to say, did we determine whether the relevant classes of transactions account balances are only initiated and accounted for through a consolidation process, and further audit work will be performed? So in other words, have we determined one of these two items on 1050G? Because if we say yes, then we are going to have the rest of the question. So you can see that if I say no here, the rest of the questions actually disappear. I have no questions here at the bottom. So only if we say yes there, and we say, yeah, actually, I need to answer questions in 1050, do I need to then go and answer the other questions? And the next question is then the one that I've switched on. So just to show you again, the question about answering all the questions. The question about answering all the questions. Only if I say yes here will I then be prompted for all of the other questions. Okay, I can say no here, that's perfectly fine. Also, that's the option per question, per audit. Or if I want in my firm, I can actually just switch this off entirely, and then I won't have all of the questions in 1050, etc. Okay, so sorry, I'm looking at the wrong question. This is the one about 1050, where I said new question. Are we planning to complete, etc. Good. Similar questions to this one where we switched on is these ones about recording the type of risk assessment, 1052, as I gave you the example earlier. Good, so that's 1050. To go back up to the planned risk assessment procedures, we said if we have similar activities, we need to go and identify for which account balances. If we have common controls, etc., we're going to go to 1050. Okay, right. So let's go to 1050 then and see what is in 1050G. 1050G is again a group specific one. I'm going to increase the size slightly. I know there's a lot of columns in this one. A lot of columns. All right, so each of the balances that's been imported and mapped will have a section activated here, if we can call it a section, a line activated for them. The trial balance that I use basically switches on all the sections, so it is quite extensive, so please don't worry about that too much. I know it looks like a lot. All right, so we are looking at the classes of transactions, account balances, and disclosures, each of them on the left-hand side. We've got the current and the prior balances. So now we're going to start documenting information that we know about these balances and classes of transactions so that ultimately we can decide towards the right-hand side whether we plan to perform procedures centrally only, okay, or centrally at all, and whether the risk assessment procedures will either be done by the component auditor, by the group auditor, or whether it is the consolidation consideration, or whether it will be done as a combination, centrally component auditor with the group auditor. All right, so that's ultimately what we want to get to. But before we can get there, we need to first understand the account balances and classes of transactions. So back to the first columns. Is this a consolidation balance only? For property, plant, and equipment, I said no. But then for rights and assets, right of use assets, just because it's the next line, and then I don't have to scroll up and down too much, I said yes. Okay, both of them are accounting estimates. And then I went and I said, well, yes, property, plant, and equipment has similar activities and business lines across the group, and I've added the entity. So you literally click add, and then you can select the ones that you want to add. Okay, you can select and deselect all the relevant ones. Then are there centralized group activities? If it's no, there's no entities to allocate. In right of use assets, I said yes, there's a consolidation one that has centralized activities. Looks a bit unrealistic. Okay, I just wanted to add one there. And then are there common controls for PPE? I said no, but for right of use assets, I said yes. And again, maybe a bit unrealistic. I just had consolidation, but it's there. Okay. And then based on all this information, later on I can then decide, do we plan to perform work centrally in right of use assets? I said yes. And then who's going to perform the risk assessment procedures? In this case, I said, well, the group auditor. For PPE, I said we're not going to do work centrally because it doesn't have a consolidation basis. It doesn't make sense to have one population. And so we're going to let the component auditors do the risk assessment procedures. You will see that if you use the core version, you will only have a comment column. But if you have the extended version, you will also have space to document the involvement of the component auditors in the risk assessment procedures. All right. Good. So that's a lot of information. You can see all the different guidances here, etc. So we need all of this information in order to be able to then say, what now? Where do we go from here? I just quickly want to check my script notes here. This is a very, very busy document. Oh, yes, I wanted to remind you. Remember when we said 1050G, I said those 4 questions, you must answer them, or only if you answer them will the columns appear. So those columns are based on accounting estimate, similar activities, centralized activities, and common controls. So if you maybe have a view and you don't see the column for common controls, just go back to 1050, not 1150 with that link there, go back to 1050 and go and see whether you've answered that question. Chances are you might have missed that question or not answered it, and that's why you don't have the column activated. Right. Right, I've mentioned all of that. So that is this document. We're going to go to 1150 just now, but for the time being, you can already notice Group Centralized Activities has a link to 1150, and so does Common Controls. And the reason is really just that the standard says the auditor, group auditor, must obtain an understanding of the centralized activities and of the common controls involved when they are in the group. All right, so that already tells us we're going to need to go and document some system descriptions about, in this case, centralized activities and common controls where they are actually there. And then also we're going to go and do them for the relevant account. In our case, right of use asset will be selected. All right, let's then go back to our workflow. 1020, we've done the work in determining the group's shared services, etc. We've documented that in 1050. And then next up now, we need to go, and you can see literally 1020 just guides you how you should go about this. We then need to identify components. So firstly, did we identify the components? And the second question, did we expect components at which it is expected that risk assessment procedures and further audit work will be performed? I'm not going to take you through each of these, but what I want you to just note here is that we literally help you from the information of the standard, everything that's necessary. So we have already considered whether there are shared service centers. We've considered common controls. We've understood the group structure. So we've already really gone through a lot of this information. In terms of identifying the components, there's a lot of consideration there that is already being done. We've already documented 1050G. I've shown you what 1050G looks like. You may even have to go to do 1220, 1220 being your audit plan and strategy. Already go and think about that. And it might be a bit tricky because you haven't actually done any risks, recorded any risks. So you may need to actually come back at some point and update it. It is an iterative process, right? So that's where you would then go to go and understand or go and identify all what possible components there may need to be. But then that's when we go and record the components. So we were busy with 1050. 1050G, I've already spoken about, and then we're going to go and record the components. So we now have, at this point in time, we now know which are the entities, which are the business units, where are they located, we know which of them actually relate to every business unit. So we know if we have property, plant and equipment, only 3 of the business units have property, plant and equipment, all those kind of examples. And we are now in a position to say, well, can I go and test property, plant and equipment centrally? So would it make sense to actually group them together? Maybe it makes sense to group 2 of your companies, of your subsidiaries with the holding company, and another one that's very different to the others will not be grouped together, things like that. So now I go back to 1120G and go and record the components and assign them to entities. What does that mean? So I'll show you in the document just now as well. I'll go and add components, and remember we'll have a default consolidation component for all the work that's done at consolidation, and then link the entities and business units to the components. And just to note, this is the place where you will go and document your components. The components will then flow through and reflect on all the other documents. So we really get to the point of record something once, and then it flows through to the rest of the document. It's just about where you are recording it. That is maybe something to just learn. All right, so we're going back to 1120G. You'll remember this document now where I said we first recorded the business units, and we went up to that one line where we'd said, okay, what's the type of engagement that the client or that entity is getting, etc. Next then is we will go and firstly go and record the components just below, and then complete the last three columns to say how do I allocate the components to the different entities. So I've got company A, and in this case, I've allocated it to component 2, whereas company C and B are all allocated to component 1. But before I can do that, of course, I need to go and record the components. And again, here, we've got the consolidation component as a default. It will be there when you open it. And then you can add extra components. In this case, I've added component 1, component 2. I'll go back to my entities and business units after recording the components and go and say, do I consider it together with other business units? I've left consolidation and company A separate. If I want to see how can I determine that, you've got your little hyperlink back to 1050G, and then I have allocated subsidiary C, B, and the client holding company as component 1. So going forward, then I'll have component 1 and 2 and consolidation. And of course, you can allocate them as necessary. If you want to have 4 separate components plus the consolidation, by all means, that's also fine. Okay. Good. That was then the components, and we are then going back to understanding the information system and the control activities. So that's 1150. Now, we will only see sections for centralized activities and for common controls. What is important here, and there was some this was specifically highlighted in the beta users or by the beta users. I cannot just say in 1050G, yes, I plan to perform procedures centrally for, I don't know, let's say property, plant and equipment, but I haven't actually said that there are centralized activities or central or common controls. So it won't activate if I don't have centralized activities and common controls. Let me say that again. The section for the account balance will only activate, the class of transaction account balance disclosure, the PPE, the revenue, etc. Those sections will only activate in 1150 for you to document your system description if one of these things or 3 things are there. Well, financial statement preparation is a separate section. If you have recorded a risk, so there's a significant class of transaction account balance disclosure, as we've had in the past, and then only if there are centralized activities or common controls. All right, only in those cases will the section record or activate on 1150. So let's go and see what that looks like. So I'm going to go to 1150, which is my information system. Oh, goodness gracious me. Okay, information system and control activities. And you can see, again, we start off with risk assessment procedures, the same thing that you would be used to already, and then a new section called centralized activities and common controls. So there you are asked to describe how the group centralized activities relevant to financial reporting and where there are relevant or centralized activities related to specific significant classes of transactions account balances. So significant, where there's a risk recorded, to go and document your understanding in the significant class of transactions section, which means that if I have right of use assets or things like that, that's not actually going to, but I've activated my right of use asset, but that was only because I actually forced it to activate it. It will actually be disabled by itself. I won't see it if I don't have a risk recorded for it. Okay, so what I will see though is in revenue, let me just increase or activate the revenue, or open up that section. There you will see that all the information is there. Now, what I have recorded for revenue is I've said that there are common controls for revenue. So I've got a question in my system description for revenue because there's a risk recorded. There's a significant SCOTB. Because there's a SCOTB, I've got a question prompting me for common controls. I did not activate or tick in 1050G to say that they are centralized activities, which is why I don't have a question for centralized activities. Okay, good. So that is this 1150 rather, the system descriptions, information system. I've got a new section for centralized activities. And then where I've got centralized activities for a significant loss of transaction account balance disclosure. In that case, I would be recording the system description in any event, and therefore I'll also be asked to document about the centralized activities or about the common controls. I'll still have my sections about financial statement preparation, related parties and those things. They will all be there still. Good. Then that is then the, almost want to say the sum total of the major changes on the risk assessment stage. So let's move on then to go and see how it changes in the work response. So first of all, in the audit plan and strategy, there you are asked to determine at which component the work will be performed. And I'll show you how and where we do those. Next up, you will have new little sections called consolidation process. No, hang on, I'm looking at the wrong thing. Called group audit considerations. Now, group audit considerations is really to say who's going to do the work, and that you cannot actually activate yourself. Well, not in 1220. They pull through automatically, or they come through from 1220G, which we will also look at shortly. In terms of the type of group audit procedures, there are now two new types. The first one is component auditors. When the component auditor will be doing the work, you will have to go and check that the component auditor's work has been done. And when you record a risk, this is another really cool thing. When you are recording a risk and the risk factor is not fraud or any of those ones, complexity, etc., but it's actually now a consolidation process, which is a new inherent risk that a factor that we've included. If it is the consolidation process, then you will also have specific procedures to test the consolidation process. All right. Then, some additional audit considerations, etc. So let's see what the audit plan and strategy is going to look like. 1220 rather, sorry, now I've clicked on the wrong thing. 1220. All right, so this is your 1220 audit plan and strategy. For property, plant and equipment, let's see what I've done there. I have not recorded a risk for property, plant and equipment, but because it's a material balance, I had to select as an assertion for testing. I said that this is no risk, and also in my planned in my audit plan or in my planned risk assessment procedures, etc., I said this will not be done centrally. There's no commonality in the controls or the activities or anything. We're going to audit it at component level. You might remember I said that earlier on. So what does my audit plan look like then? From the group audit consideration perspectives, I have at component level only ticked. I cannot untick it here. I'll show you where we've done the selection in 1220G. On the group audit procedures sections, this is now similar to the sections we had earlier, like the substantive sampling or things like that, but now specifically for group audits, we have use of component auditors as a section. No consolidation process because I did not record a risk with the consolidation process as an inherent risk. Note also, under audit procedures, I do not have required procedures, extended analytical, any of those, because we said we're not going to audit it at group level. We are going to audit it by using the component auditors only. So my work program is going to be very short. It's just going to refer to working, considering the component auditors work, and the work will be on that side. So my evidence in my group file is going to be with regards to what did the component auditor do, what did I see there, what did I review, and my conclusion on that. All right. So that's for property, plant and equipment, where we said we are going to audit through component auditors only. I will show you 1220G just now, but there is a hyperlink. Let's just see the other option being revenue, where I have recorded risks, obviously my fraud risks. I have recorded the risk for cutoff in this case. And if we then go to the group audit response, what we will see here is that I have recorded a risk for cutoff for the consolidation process. Whether that makes sense or not doesn't matter so much. I wanted to show you that the consolidation is a separate component, remember? So the consolidation for group considerations is in there because we said we're going to audit it at consolidation level, at component level as well. And then, so in other words, not centrally, not as one population, just at component level, and then we'll also audit the consolidation. I had a risk recorded for consolidation, so on the right-hand side, group audit procedures, consolidation process is activated for those procedures. I'm also going to use the component auditors, so group audit procedures for component auditors is activated. I do have required procedures because I need to respond to my risk that's been recorded, and that specifically then relates to cutoff in this case. All right, so we're going to look at the work programs later on as well, but let's go and have a look at what 1220G looks like, because remember now, the tick marks, let me rather show you the pre-PE one because it's smaller, it's more closer to each other. The tick marks for group audit considerations as well as group audit procedures is pulling through automatically from 1220G. 1220G being further audit work at component level. So for property, plant and equipment, there I've got the items pulling through automatically saying there's no risk. We only selected AVA as the relevant assertion. We said that the class of transaction is not initiated through a consolidation process only. We did not plan to perform work centrally, so therefore this is already giving us information pulling through from earlier documents, and all we need to now go and do is to say, who's going to do the work? We are saying this work will be done at component auditor level. We're not going to do it centrally. So consolidation at component level, component auditor, which maybe now doesn't make a lot of sense because obviously that is actually the consolidation group auditor level. For component 2, I looked at what's happening in component 2 and it's so small, there's no risk. We said no audit work required. But for component 1, we are going to audit that at component level only. Right, and so this information can then be used to communicate to the component auditor to say what is it that you are required to do. So component auditor 2, you don't have to audit PPE. Component auditor 1, you have to audit PPE. The columns in between here is really just to help us, again, using the application material from ISO 600 to determine the disaggregation that's required, because maybe because of the size of the component or because of the nature of that component. Other factors taken into account, whether there was past control of deficiencies or past misstatements, anything like that, and then to determine who is going to do the work. All right, if there is a risk associated, I'm going to show you in revenue just now, then we will also see whether the risk is associated to that item. Now I've selected reserves and not revenue. Okay, so in revenue, there we do have a risk recorded. So relevant assertion cut off. It's not through a consolidation process that this balance is created only. We are going to do some work centrally. We have decided to do some work centrally as well. And now, apologies, we need to decide who's going to do what work. So we ask ourselves whether the group risk is relevant to each or any of these components, and we can go and tick them. We said the issue is cut off. Maybe the issue is for all 3 of them. Maybe it's only for some of them as we need to. And consider all of these matters so that we can conclude who's going to do the work. In this case, the consolidation will be done by the group part auditor, and the component level auditors will audit the components. All right, so that all of the information that's selected here pulls through back to 1220, which is the audit plan. Okay. And that will then pull through to the work program for us. All right, so let's go and have a look then at the work program. Oh, before we go to the work program, I wanted to show you this nice summary at the bottom of 1220G, which is really helpful. So we've documented everything. And then right at the bottom, we've got a summary table, scope of work at component level. So what do I see here? Per component, I see the different classes of transactions listed there. In this case, we've only got PPE and revenue, and who's going to do the work there. So consolidation, engagement, rather auditor is going to do some work on PPE, do some work on revenue. Component 2, only do some work at component level for revenue, nothing about PPE, etc. So this is really helpful. And then I need a few other points to help us, and again, to consider whether it's a firm, network, etc. All right, so that's a very helpful table. Then if we go to the work programs, then let me quickly show you the summary of the slide just for an introduction that we've done. We now have the new sections, use of component auditors, the consolidation process when we've got the separate risk factor, and then conclusion questions specifically amended for the group scenarios. And then just where we need to revise the audit plan, we have the option of a so-called additional procedures. So let's see in the PPE work program what that looks like. Just give it a moment to change over. Right, so now we've got property, plant and equipment, and we've got a selected assertion. Let me go back. I want to actually just quickly change this one thing because I've changed it, I played with it, and now I'm not going to show you what I wanted to. So property, plant and equipment, it's now funny because I've got the consolidation scenario. I'm just going to say no audit work required because I don't want us for PPE to now actually have work. I want to show you what it looks like when there's really nothing for the group auditor. You can have this in some scenarios. Let me just refresh this work program. Just refreshing all of these links interlinked between all of the different documents. Okay, I think that's as far as we're going to go now. So I now have the section called use of component auditors. So this is the section that will then guide me in terms of ISO 600 to really show me how I should be auditing or considering the work performed by the component auditors. Right. My scripts are now not updating. I must close the document and open it to show you that there's really no required procedures would not be activated here, but I would actually have a scenario where I can just have use of component auditors and just telling me what to do in terms of the component auditors. Right. What I will have in my conclusion is I'll have some questions. Quickly want to scan it. This one, number 2, or any matter that may be significant with financial statements within the group that may be required to be audited by the statute or for any other reason. A lot of questions, quite a few that will actually relate to groups. So restrictions imposed on component auditors. Is there a concern about the quality of the component auditor's work, perhaps? Sorry, the questions are quite small. 819, that the work performed by the component auditor is inappropriate for the purposes of the group audit. So all of those questions from ISO 600 with regards to component auditors is then amended or added and included in our group, well, in the work programs where you have the group or the component auditors in this case. Right. What you will also see is where I need to conclude then on assurance obtained. In this case, I've got the required procedures, but I also have a separate line for how much assurance that I get from the use of component auditors, so from their work. What assurance that I get from that, and I can then conclude. Then in terms of the actual conclusion, we also said that if I need to revise the audit plan, just quickly going to show you what that looks like. If I need to revise the audit plan, give it a moment to run its. If I say I need to actually add or revise general audit plan, including then laws and regulations, you will probably be familiar with this, where you would maybe sometimes go and switch on the sampling tab or the sampling section or any other sections. You now have the option to switch on the consolidation if you come across a new risk or anything like that. But then if you do conclude that the work performed by the component auditor is not sufficient or inappropriate, and you're not actually getting any joy, you're not getting sufficient appropriate audit evidence from the component auditor, as group auditor, you need to step in and do additional work. And that's where you then have the tab to do additional procedures, to add additional procedures. Note these additional procedures will not actually have anything because we don't know what the issue is. You need to then go and design your own additional procedures to address the issues, the outstanding matters with the component auditor's work. If I go to the assurance obtained again, there you will then have the additional procedures to conclude on as well. Right, so it's really, I think it's fantastic. It really is interactive, and the flow is extremely, yeah, it's the same as we've had before. It's just obviously we've never done group audits before, so there is some interaction that is new. But once you get to the work program, it's the same as before. For revenue, this is now the revenue work program. There we did have the risk. We've got the fraud responses. So what you will see there is you're going to have sections for significant risk responses. You're going to have your required audit procedures. Why? Because we do have to audit that, but it's quite limited. And then you will also have your work of component auditors. We said the component auditors must audit this individual components, and we've got a consolidation process to say we also have a risk related to the consolidation. Now, again, the procedures, we can't prescribe you what those procedures should be. So there is then just the point to say, a risk of material misstatement at a certain level that relates to the consolidation was identified, you need to add the procedures. All right, so that's what happens when you have a consolidation process. Again, a number of questions here to guide you through the group-related considerations. And when we get to assurance obtained, you then also have a line to document what assurance you've obtained with regards to the consolidation process related risk. All right, for this revenue class of transaction. The consolidation in general we'll also have a look at just now. In fact, that's the very next point. So that was the work programs in general. If we then go to the financial statement preparation work program 18.10, this is of course a general work program, so you don't normally do risk assessment for that one. What that will look like then is, let me just get it to move. All right, so you'll still have the questions around, I almost want to say whether these financial statements were properly prepared. But now remember that we also have a consolidation. And as an extension then of your standard 18.10, you then also have a question or questions that prompt you. Sorry, now I just need to find it quickly. Let me just show exceptions. Oh, no, sorry. Default view. Thought I was going to find a quick way. There we go. There we go. So there's the question then to ask us, perform the procedures related to the consolidation process in 25.10 consolidation process. So there's an extension to 18.10, and that is then the work program 25.10G, right, which is the consolidation process work program. And the consolidation process work program is then what is basically supposed to be used to ensure or to document your procedures performed to test the actual consolidation of the financial statements. Now let's just quickly see what's included in there. You'll see there that I start with a warning, and you would have already seen the yellow highlight at the top. So there's a warning for the 2024 release to say that the framework-specific audit procedures on the consolidation needs to be added in. That has not been added in there by default. That will be added in a future release. So please just know that any framework-specific, in other words, IFRS or IFRS for SME-specific considerations needs to be added in there. There are, however, procedures with regards to subsidiaries, additions of subsidiaries, disposals, etc. If you tick the relevant questions in 1050, gathering information, where you were asked perhaps, were there any additions of subsidiaries, etc. And the same with regards to sub-consolidations and the procedures related to sub-consolidations. There's a question in 1050, gathering information. If you said, yes, there is a sub-consolidation, you will have procedures in this work program as well. All right, so there's our little warning to say the specific framework, specific procedures are not active here. And then just the standard work program required procedures for you to go and test the consolidation, conclusion, and because there's no risk assessment in a general work program, of course, your conclusion being satisfactory or unsatisfactory. All right. Next up then is the evaluation of the component auditor's work. So we have the component auditor's element in the work program to say go and review the work done by the component auditor, but we also need to consider the work done by the component auditor, and this work program is then always used for, let me just go back there again, it's always used in group auditors. So whenever you have a component auditor, you will have this document to basically guide you. It's like a checklist, step by step, taking you through everything that had to be performed for the component auditors in terms of communication from them to them, etc. Two other documents that we also have is 1222G, again, a checklist to help you to consider. 1222 is with regards to resources. So this is almost, if I can put it that way, where you are linking your ISO 220, your quality management at engagement level. That's just applicable then to the component auditors. And you then also have 1222-3G, which is a document that helps you to communicate materiality at the disaggregated level. So if you are giving work to component auditors and the information, the financial information is disaggregated, you can use this document to actually go and calculate the component performance materiality, which may then be lower than your normal performance materiality. Also then, secondly, the threshold. So there, the threshold above which misstatements must be communicated to the group auditor, and then your conclusion there as to the performance materiality's appropriateness or not. What I did not include any slides on or anything like that is the finalization section. In finalization, the documents have also been appropriately amended. So your 0250 consideration of the assurance report, the partner sign of all those things, they've also been amended for your group audits. Good. Additional guidance that's been added there. The team put together two lovely decision trees that are already on the success community. I literally took these screenshots from the success community. So you can go and have a look at how to respond to risk at material misstatement at assertion level. So both relevant assertions and selected assertions for material classes of transactions, and then basically to help you where to flow with all of these things. When are you testing what, etc. And really just to try and help you to understand the response to risk of material misstatement. Where are you auditing things? Then also, I suppose I should have put it the other way around, also the risk assessment, how to plan your risk assessment in groups. So first off, we start with whether the class of transaction account balance or disclosure is an accumulation. In other words, is it a consolidated value or consolidation balance only or not? Is it also in the components? And then you can see all the different processes, steps that you follow to ultimately go and do your risk assessment for these classes of transactions, account balances and disclosures. Good. Other matters that's also been amended in this template. So that was then a quick crash course on ISO 600 and specifically then in probe. A few other things is a compliance add-on for South Africa about the Companies Act. I'll show you now. I've mentioned the IRBA enhanced auditor rule, auditor reporting, quick note on the frameworks, key audit matters, and then also just the uncharacterized risks function in 1116. So in the audits of legal entities of companies, we have questions around the Companies Act and procedures in the engagement file and various of the documents. In group audit multiple, there we are auditing the group, and the assumption is actually that the Companies Act related questions are probably dealt with in the individual holding company audit file. However, the team has the option to activate the Companies Act procedures in the engagement file when they are treating or auditing a group audit multiple file. In group audit single, it's still a company, so you'll get that same questions in any case. Large and small, all of that, nothing's changed. It's just where we have a group audit multiple, where we're basically just auditing the consolidation and the separate company is audited separately, where you can choose to include that. However, the presentation and disclosure requirements will always be included in 18.10, the financial statement preparation work program. Okay, so that's just a new or an additional thing for group audit multiple. The RBA's enhanced auditor reporting rule is effective, and don't get confused here, it's for periods of financial statements ending on or after 15 December. So it's also your 2024 year ends. And what this rule asks or requires is additional disclosure in the audit report for public interest entities. Now, it's important, and I specifically added it here, the definition of public interest entities has changed. So if you're not aware of that, please go and make sure that you are updated on what that is. The product has obviously been updated for the new definitions, but just be aware of what these new definitions are so that you can make sure that you identify all your public interest entities. Some who were in the past may not be, and others who weren't public interest entities may very well now be public interest entities. And then there's been changes made to 0250 for the consideration of what must be in your audit report, and then also because additional reporting needs to be done for key audit matters, 2 new data fields were also included in 0250, so that you've got all the information required for key audit matters in the case of public interest entities. Maybe just another thought there, just more theoretical or technical. Key audit matters used to be required for listed entities only. In terms of the enhanced auditor rule, key audit matters are now also required for public interest entities, which means you're going to be reporting key audit matters for more entities. Okay, so just make sure that you are prepared for that when you are auditing. Financial reporting frameworks. The IFRS Foundation has issued trademark guidelines. In short, because the International Accounting Standards Board now issues two sets of IFRSs. You've got IFRS Accounting Standards and IFRS Sustainability Standards. We are no longer able to just refer to IFRS standards or IFRS. So we are having to refer to IFRS Accounting Standards as issued by the IASB and IFRS for SME Accounting Standard. It's just one standard. So you can't talk about IFRS for SMEs anymore. There is a whole document about that, but the product, both in Probe and the financials, has been updated, and I'm sure Ninka will also refer to that in the financial statements section. Key audit matters. There's been a few procedures added to the document, and then just maybe the most critical thing to note is that the engagement partner sign-off was deleted from 0255, the key audit matters document, and in the partner sign-off, you now have a declaration related to key audit matters. So that's maybe making it easier. Uncharacterized risks, a new functionality to say that when you are recording risks or you have recorded risks, that no longer belongs to any existing sections. Maybe you've deactivated that section. Those risks will now be highlighted by a separate section right at the top of 1160 to say these are uncharacterized risks. They don't belong to any active sections. You can then either delete that risk if it's no longer serving any purpose, or edit it to select a relevant section. Right, so that's just a nice user-friendly functionality. All the fixes and hot fixes that were released in the previous, since the previous release has been included in this release, so you no longer need those hot fixes. And then just a few known matters that will be fixed in the next release. When you are recording risks, there are some blank risks that appear under this uncharacterized risk section. You can just delete them. And then, as I said, when you create a risk, sometimes there's a blank risk that almost like a duplicate that gets created, but it's a blank one. So again, you can just delete that. And then just to note, there's a difference in the figures, the amounts between 1052 and 0240. Specifically there, the total assets balance has a difference, and that's because the technical assets is not included in the balance of 0240. For total liabilities, there's a deferred tax that's offset in 0240. That's not offset in 1052. So just be aware of those. Again, they will be fixed in the next release. Good. So that brings us 1 minute past the 10:30. I do, while you are sending me any questions that you have, I do want to just also highlight 2 points that were communicated in the last few weeks. We are very excited to remind you of our extended support hours. The support desk is now available from 7 a.m. to 7 p.m. South African time. It is to also accommodate some African countries, but the benefit for South African users is that you actually now can call support either if you start work at 7 o'clock already, or otherwise before you need to go out to your client, or after you come back from your client. Also note, and this has actually been used extensively already, you can book a 30-minute appointment with a support person. So then you know that you will have a dedicated support person at a time that will suit you. So please use the bookings functionality, use the support staff that are now available for extended hours. And then also a reminder of our Get Ahead series that we had at the beginning of the year. So those videos are all available on YouTube. You can go to the YouTube Caseware Africa channel, and then you will see there is a, I think it is a video series or a playlist. I was just on there yesterday, where you will see all of the Get Ahead new intake training sessions. There were a variety, both some on Probe, some on Audit International, and then lots on Caseware Working Papers, financial statements, cloud, etc. All right, so that is it from my side. I do want to give an opportunity for any questions, if there are any. I haven't really seen too many coming in. I saw that Ninka shared the link to the Probe release notes, the what's new. So I will still be around if there is anybody that has any questions. But otherwise, thank you so much for coming to today's webinar. Thank you for your participation. And yeah, I hope you have a fantastic rest of the day. Please remember to join the 11 o'clock session with the rest of the team, where they will tell you more about the financial statements, the client inquiries app idea integration, as well as the working papers. So please join at 11 o'clock. But otherwise, thank you so much for joining today.